And welcome into your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial, investment, and retirement future. He is president and founder of McIntire Retirement Services, Chris McIntire. We are always privileged to be joined, Chris, and appreciate the time and the knowledge that you share with us. Thank you for being here. How are you doing?
Hey, not doing too bad there, Peter. We just recently came back from the Nashville area and trying to adjust to an hour difference in time there, And I know it's not that big of a deal, but an hour means a lot when
Yeah.
when you get a little bit older.
Nashville's such a fun little town, though. I've only been there once, but had a good time. I did feel a little bit like a grandpa at one point in time. I was like, this is just too loud. I can't hear anybody talk, and I had to leave and sort of regroup. But seeing the scenes and walking the strip with all of the bands playing, it was a very fun town.
Yeah, and for full disclosure, we were a little further south. I'm not a big country music guy, as Peter knows, and nothing against it. It's just nothing I ever grew up with. And so we were down in Franklin and Franklin, Brentwood, and the Leapers Fork area. Just beautiful down there. And man, you want to talk about a place to be a real estate agent? That would be the place there,
Yeah,
boy.
and,
My
and 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 it seems like there's still space to expand down there, and I guess that's why so many people are heading down that way or up that way, depending on which direction. But it seems like a lot of people going to the Tennessee, North Carolina, South Carolina areas, Chris.
Yeah, yeah, no state income tax in Tennessee, and it is booming there. It's unbelievable. But anyway, great time, and everybody's been to Nashville at some point, or you should go anyway, too. Yep,
Yeah,
lots of good history.
yeah, good. And how's the family? Everybody staying healthy?
Yeah, yep, for the most part, we're working. Mom's been in some rehab, and she had a stroke and a little bit of issue there, and hanging in there. We did lose my father-in-law, as you know, Peter, probably a month or so ago, and Robin recovering from some of that and cleaning up the estate and whatnot, and but Robin's doing fine, and I'm doing fine too. A little tired this morning just from traveling back yesterday, an 8.5 hour drive, and but we'll be fine.
Well, it's always good to see you, Chris. And just a reminder, ladies and gentlemen, if you've got questions about your financial and retirement well-being, your planning, your investments, Chris McIntire is the resource for so many proactive planners and savers and investors throughout Northwestern Ohio. And he can be your resource as well. That's what he is here for. And he helps planners put together a personalized game plan for retirement. It is a physical document addressing the pillars of planning: income, investments, taxes, healthcare, legacy, all of those in a plan, personalized for you, customized with your goals in mind, long-term visions, diversified strategies, a fiduciary relationship with an advisor. If you would like to see what that means and how a plan can help you feel more confident about your financial future, I do encourage you, give McIntire Retirement Services, Chris McIntire, a call, 419-332-0532, 419-332-0532. Get your game plan for retirement put together with the help of an experienced, qualified professional, Chris McIntire, our resource that you hear here on the radio each and every week, 419-332-0532. And today, Chris, we're going to be talking about constructing that plan, a foundation first approach. And as the idea of this was floated, it struck me, house to skyscraper, any building, any structure always starts with the footprint and laying a solid foundation, and how important that is to the ongoing and lasting stability of that structure, whatever it is, a home, an office, a skyscraper. That is so important. And I think we can't build the rest of the structure until we have that foundation in place.
Yeah, you're exactly right, Peter. Great example of, while we were down there in Tennessee, our friends and clients that were down there are building a new home down there. So, we spent a lot of times walking through the subdivision, walking through different homes and whatnot. And, all the homes were different. They had different sizes, different room makeup, but they all have the same process, right? They have to pour the foundation. That begins what is the outline of where that home is going to sit, its footprint, if you will. Is it going to have a two-car garage, three-car garage, and all of those things. So they do, when it comes to retirement planning, you have to put your foundation in first as well. So that is your basic, kind of the solid piece of your the most important piece of your financial plan is the foundation, something that can weather the storms, and that we can rebuild on if a wall falls down or the roof blows off. Obviously, we're here in not hurricane, but tornado area at times, and we get a lot of crazy winter. We get freeze thaw, all those things. So we all know we need to repair our walls, replace roofs, but we don't want to have to replace a foundation.
Yeah. Well, I was actually going to bring up the hurricanes, Chris, because I know you're also a traveler down to the Outer Banks of North Carolina. And there are some homes down there that the foundation has been eroded away. I mean, they don't even have a foundation. They put these homes basically up on sticks, on pilings, and they do their best. They really pound those pilings down into the ground as far as possible, but because they don't have the ability to really have that foundation. If they've built them too close to the ocean or where hurricanes might have some storm surge and the water comes up on those outer barrier islands, they're kind of notorious for homes falling into the ocean. And that's, I guess, kind of an example of you got to choose the right location, but how important that foundation really is to lasting stability.
Yeah, absolutely. Most of those houses are second homes for a lot of people. Their primary homes may be inland further or in a whole different state with obviously, what we'd want as a rock solid foundation. And, it's easy to say that here in Ohio because it's just flat. We don't have to worry about hills. I know where the anniversary of Hurricane Helene with the massive flooding in the Carolinas, that simply washed homes away. That's not the perspective we have in Ohio. It's basically flat. Yep, we'll deal with a little bit of flooding every once in a while, but we don't have those massive. I think that's what an attraction to the Midwest is stability, if you will.
Yeah. Well, for our analogy here, Chris, is that life conditions change and retirement is a completely different phase of our financial life. The paycheck goes away. And in order to have immediate and lasting financial confidence into and throughout the day, the month, the year, the decades into retirement, we have to have a foundation first approach to retirement planning as well. And so, if we could dive in a little bit, what does a foundation first approach to financial planning mean to you, Chris?
Yeah, it means, knowing the basics, what is the budget and the expenses that we're looking at with the client that we're dealing with. And they'll come in with information and some of it's very refined. In today's world, we have a lot of, software programs where people have been running things through Quicken or eMoney, one of those some of those online guides that are very, very popular. And they may say, okay, we've got our expenses are $4,000 a month. Our income from Social Security is $4,500 a month, and then probably have some taxes taken out of that. So basically they're pretty close to a wash between income and expenses. Okay. But they want to go out to eat more often. They want to do some traveling. They want to, maybe give some money away or, many different things that you can do. Okay. And then we start looking at, okay, what is the asset base that we can look at? What is the value of the 401ks? Do we need to roll them into an IRA? And in doing so, what investments do we use in the IRA? Do we use stocks, bonds, real estate, alternatives, structured notes? Do we put some safe pieces in play, like right close to that foundation? Do we put in a safe money strategy that might involve, look, we're going to park several $100,000 over here for the what ifs in life, and or if we have a wall that blows down, the stock market goes down 20%, let's just call that, the roof blows off the house or you get some roof damage, just to tie the two together. It's like, all right, we can go down to the foundation here. Maybe that's where you go when you're weathering the storm or, for the tornado, we're going into basements here in Northwest Ohio and, or crawl spaces, if you will. So, we go in there, pull some dollars out of those strategies and then repair the roof and give it time to recover.
Um, So, lasting confidence, Chris, the foundation here is not only knowledge of expenses and spending, but the income that's going to equate to those, and then addressing those what ifs that you mentioned, all of the risks. And I'm sure we'll spend some time on today's program, ladies and gentlemen, talking about those what ifs and how to also structure your plan to address and account for those with stability. But just on that basic level of spending and expenses and budgeting, Chris, how many of your clients really, during their paycheck, during their earning years while they are working, have had to scrutinize their budget to the level that it takes to have financial confidence in retirement?
Yeah.
And is
So
that going to have to change once they do retire?
yeah, and it certainly could, but obviously with a broad base of clientele here, we're kind of stereotyping. So, if we've got some folks that, weren't really in the numbers business during their working careers, they may not have had the extra dollars, so they actually might actually know their budgeting better than somebody who had more discretionary income and said, you know what, we never paid much attention to it. We went out to eat,
Yeah, that's sort of
accountant or an
my
engineer.
question and feeling is that like those that have been more comfortable might actually pay less attention to this.
Yeah, without a doubt. And those that have had to pinch pennies to get kids through college and, whatever the circumstances may be, maybe even furthering their own education, a lot of times they know exactly what's coming in and exactly what's going out and, on what week or what month they can actually go out and do a little bit of extra spending.
So, Chris, if maybe we have been in that category where we have not been forced to or enjoyed the process of budgeting as much and really understanding every expense and where every dollar goes, what does that process look like if we are trying to lay that solid foundation for retirement?
Yeah, and sometimes we call it defining the income gap here. What are we trying to solve? And my math teachers out there will be very happy with me knowing that, look, retirement planning is a lot like solving the basic algebra problem. We're solving for the unknown. We have sometimes we have, $4,000 a month coming in, but we have $6,000 a month going out until the house gets paid off, as an example. Okay. How do we create the $2,000 a month out of the investment pieces we have to look at? And that's a basic, analogy right there that we can, extrapolate that out further. Sometimes we have folks that have more money coming in than what is going out. And what do we do with the extra money? Because right now in the US, I just read in the Wall Street Journal over the weekend that there is $7.7 trillion in money market accounts right now. So there are a lot of people, and these aren't young people, these are older, more mature people, have some cash savings on the sideline. So that's a nice bullish discussion for further growth in the stock market as interest rates come down, just to throw out an analogy there, buddy.
Do we expect that to change? Just focusing on that statement for a moment, that stat, seven trillion dollars basically sitting in cash on the sidelines. Interest rates have been attractive, so that has been a semi-reasonable alternative to abstain from risk and still earn some interest. But as we saw the Fed finally cut rates and expecting more of those, Chris, do we expect those dollars maybe to shift back toward the market and toward risk?
Yeah, especially when rates start going down below 3% for money market accounts, you're going to see some shift of some of those resources move maybe into, higher paying bonds, dividend stocks, that type of thing. That would be common. And if it flows into the stock market in general, or even the bond market, that pushes those prices up. So investors also have the ability for some capital appreciation plus dividend and interest to come in as well too. And, nobody's going to cash in every penny in their money market accounts. They have that's peace of mind or sleep insurance, if you will, we call it. And makes perfect sense to have that emergency fund. Absolutely.
Once again, we are talking with Chris McIntire. We are talking about a foundation first approach to planning for your lasting financial stability and confidence into and throughout retirement. The most important piece of that lasting confidence, ladies and gentlemen, having a plan. And Chris McIntire and his team there at McIntire Retirement Services do make an offer here on the program to help you put together your personal customized game plan for retirement. It addresses the pillars of planning that are essential for that confidence: income, investments, taxes, healthcare, legacy. Most people have done a good job in one or two of those areas, but have actually arranged their affairs in such a way that the other areas might not be addressed or could even work against us in retirement, especially with those deferred taxes. And so Chris McIntire helps you back up, strategize, and formulate that game plan for retirement. It is a courtesy complimentary service that he offers there. So if you'd like to get your personalized plan, again, long-term vision, personal to you, diversified strategies to help you achieve your goals, pick up the phone and give McIntire Retirement Services a call. 419-332-0532, 419-332-0532. And the foundation, Chris, this is like the most basic part of any building or structure, just like it is with our financial planning structure as well. But so important. You cannot build the rest of the structure without the foundation first. And so, as you are helping people better understand the ratio, the math, the algebra of the spending and expenses and where income is going to come from, I guess two sides to this. One, do you suggest that it is important for them to look at and examine and define the budget? And then is there a better than other situation and strategy for where to generate the income from? Does the order in which we tap accounts matter for retirement significantly?
Yeah, it certainly does. So, for example, somebody retires at age 62 and they have to buy their insurance through the Affordable Care Act, or Obamacare, if you will. And we have to watch how much income they have coming in, taxable income from IRA withdrawals, Social Security, and pension income, to help determine what that insurance premium is going to be. And I think some of that's in the headlines right now as they start talking about doing another continuing resolution for funding the government a little bit further, and they want to make sure that healthcare premiums don't skyrocket in the middle of this. So this is a headline driver. But if these folks have money in a Roth IRA account or in a savings account, significant savings, we can pull money out of that and not create additional taxable income. Then once they get to 65 and hit Medicare, then we have a little more wiggle room there to play with before, they start jeopardizing healthcare premiums and whatnot. So that's a good example there of trying to make people look poorer on paper until they hit age 65, for example.
And that's through the different order in which we might access our various accounts, whether it's those tax deferred IRA dollars first, or maybe not in that case. Maybe that's something that we save till after 65, but we would need to have other types of assets. Do you find that people have enough diversity in the taxability of their asset classes? I know we talk about, stocks, bonds, mutual funds, and different asset classes for diversification of our investment dollars, but tax status is diversification as well.
Yeah, it certainly is. And, we talk about, when is it time to convert money from a traditional IRA into a Roth IRA as well? And some of those things that come into play as we make those determinations is, are they on Obamacare right now? Do we need to, make them look poorer on paper until they hit the age of 65? Or they're age 73 and now they have to take out a very large required minimum distribution. What are the ramifications that's going to have going forward? Because let's be honest, some people have very large IRA accounts. You can't get all the money out of there without doing significant damage to the tax situation. So, on a case by case basis, you look at it and say, okay, hey, where are the opportunities right now? And, another good opportunity is, the stock market has fallen. And I'm just giving an example. The stock market falls 20% in the month of November. Well, should you do some Roth conversions and move some of those assets that are down 20% into a Roth IRA because you paid, you moved an asset that was 20% lower into and created a taxable event? It will recover in the Roth IRA income tax free. So that's a good example of, just taking advantage of different opportunities that come up throughout the course of a retirement.
And once we have that foundation in place for stability, we are probably better positioned to identify opportunities like that. So we've talked about laying that foundation, filling the footprint, ladies and gentlemen, understanding your spending and expenses, defining your guaranteed sources of income, Social Security, pensions, making proper decisions and choices with those, maximizing that, minimizing the income gap, and then the order of operations, formulating the income plan for how to fill your need for spending and expenses, paying bills, paying taxes, and doing all of those wonderful things that we envision retirement to be about. That's just one of the pillars of the game plan for retirement. We're talking so far about income essentially here. Income, investments, taxes, healthcare, legacy are all five critical areas, five worlds that every plan must address for lasting financial confidence. And that's what the game plan for retirement is all about. That's the personalized plan that Chris McIntire will put together with you and for you, and then help you implement and monitor and adapt over time that plan to continue to keep up with the world as it changes around us, and your own life circumstances changes. If you would like to get your game plan for retirement or review your current investment portfolio, pick up the phone, give Chris a call, 419-332-0532, 419-332-0532. So Chris, once the foundation is laid, we do need to worry about some of the risks, the storms that can happen over time, or even just small shifts, cracking foundations, and inflation, healthcare expenses, market volatility. These are all things that once we have the foundation still could affect the structure of our plan and should be known and addressed.
Yeah, without a doubt, especially, a couple of things you talked about there was, the stock market can seriously derail a retirement, sometimes in the short term, sometimes in the long term. Depends when it happens. When is the sequence of the returns significantly impacting your retirement lifestyle? So you have to balance your growth versus safety inside your portfolio, and income, obviously, as well, dividends and interest. Peter, you made a nice transition into talking about healthcare costs and even long-term care costs, for example. Healthcare typically is going to be Medicare for most of those turning 65. My wife has transitioned into Medicare here, and so, our health insurance premiums have actually gone down. For some of you, you didn't have to pay anything for health insurance, and now you're paying for more healthcare expenses in retirement through Medicare, a deduction in your Social Security, buying your supplemental plan, buying your prescription drug benefit. Okay, then we talk about, okay, what happens if somebody spent some time in a nursing home, and let's say it was only 12 months. Okay, well, it's, can be upwards of $10,000 a month. That's $120,000 a year. Okay, are you pulling that out of an IRA account, or, because most people haven't bothered to actually address that, not one of those big issues in their retirement, like, maybe we should get some form of insurance protection for this, because my God, if our house catches on fire, I've got that insured. That's one of our biggest assets. If you go into a nursing home, I mean, you could be exposing almost every dollar that you have to the spend down before the taxpayer picks up your through Medicaid, we call that, picks up your healthcare tabulation. So, a lot of, that's a very key component, Peter, that so many people, refuse to address, or they say, well, my kids will take care of me. Well, I can tell you that, my mom's been in and out of a rehab facility here for the last several months, and we can't take care of her. We pay other people to help take care of her. And, my dad can only do so much. And my brother works full time. I run a business. So sometimes that sounds good, but it doesn't work in reality.
Well, again, so many of these issues, these risks, Chris, we will have to address for lasting financial confidence. The walls, the windows, the doors, the roof, they obviously protect us. But we've got a plan. We've got to have those functionable for our lives and our intentions. And the foundation first approach allows us to then begin to build the structure to address those issues. And whether it's healthcare, whether it's market risk, whether it's inflation, Chris, I think that these still remain a concern for people. But aren't they far less of a concern if we do have that solid foundation in place first?
Yeah, absolutely. I'm not worried about going into a nursing home because I've already taken care of that problem. I'm not worried about dying early because I've already taken care of that problem. I'm not really worried about living too long because I've already taken care of that problem or potential problem, I should say. A lot of these are potential problems, to be grammatically correct there. And there are ways to address that. I'm investing for growth right now, and I'm still working and contributing, so I don't need to be as probably as conservative as somebody who's listening to the show today that went through the month of April here in 2025 and maybe saw a significant drop in their portfolio value. That's why you have a safe money strategy. So if the market tanks, that you've got some money sit over here on the side that you can go and rely on and give your investment portfolio time to recover. I mean, that's just makes perfect sense for many folks that we work with.
Chris, we've been on a fantastic market run, and you mentioned the blip temporary as though it was it back in April. I mean, it shows how quickly things can change. Markets were down 15, 18%, very quickly bounced back, but they did go down. I think a lot of people have been enjoying this market ride, but then on the other side, there's a lot that have been so worried that we have not seen a significant nor prolonged recession in a while. Are we overdue? How do we have the balance there? We have again the foundation first in place. We have addressed our need for income to meet and match our expenses. Our spending is in a fairly confident place because of the plan that we've put in place. But then we've got other money and we want it to grow. We want it to do something for us, but we also always have to be cognizant of the reality that the market can shift like that. So how do we find that balance once the foundation is laid?
Yeah, Peter, and let's be honest here. When we talk about the market, most people are thinking of the stock market, but also we have to worry about the bond market. They raised interest rates 11 times in 2022. It was one of the worst year for bond performances. Okay, and then we talk about the real estate market. So when we talk about the market, man, that's a pretty broad piece here. There's ways that you can make or lose money depending on what type of investments. Most people would think, you can't lose money on housing. And we know that in 2008, that about brought down the financial system. Bonds were typically made to be safer. Well, they raised rates in 2018 and bond prices went down. They raised rates in 2022 significantly and bond prices fell. And they're now recovering now because we're seem to be on the other side of that interest rate cycle. And then the stock market, obviously, with all the geopolitical risks, the tariffs, there's a number of reasons that you could say, well, I'm not going to invest in the market because right now stocks are so expensive. But it doesn't mean they won't continue to go up. And there are many different types of stocks. So, Nvidia is obviously one of the most popular ones. If you turn on the news today and all the AI infrastructure and the huge amounts of money that are being spent around artificial intelligence. And if you don't like, AI or the tech sector because they're awful risky, they can go up and down. Well, you got energy stocks, for example, that need to build the plants to fuel the data centers that are being built right now. So, I mean, there are ways, not all stocks are treated the same, I guess. And nice thing about energy and utility companies is they're very good dividend payers typically.
Yeah. I have enjoyed our analogy between building and homes and the stock market. I think there's a lot of similarity there, Chris. And as you sort of just alluded to, I've got a buddy who is considering buying a home after a long time renting, and he said, should I go ahead and do it now, or would it make sense for me to wait another 5 years? And I say, hey, if you're in 2030 looking back on 25, you're going to appreciate buying at 2025 prices, even though they seem high now. And I think that might be the same for the stock market as well. Don't the key for growth is not sitting on the sidelines. And so we need to gauge that carefully within our risk tolerance. We need to have our foundation in place for stability, Chris. But I think that there is reason to be an investor. Also reason to have some savings, but certainly reason can be made to be an investor despite the risks. And that's why I think so many, Chris, have turned to you, is to help navigate that and keep the stability forefront in the focus of especially retirement, while still taking advantage of the growth that the market and investments have to offer. So confidence in retirement, I think, Chris, comes from preparation, comes from planning. I know that you help people put that plan together with that foundation first approach, looking at expenses, looking at spending, making sure that's covered, and then helping them with their investments and their taxes and the healthcare decisions. And finally, creating that meaningful, impactful legacy, leaving value and values for others. And that's the game plan for retirement, ladies and gentlemen, and it's why each and every week we turn to Chris McIntire for his guidance and advice. We appreciate the time, Chris, and I know so many across Northwestern Ohio have taken advantage of getting their game plan for retirement put together.
Hey, my pleasure, Peter. Good to be with everybody there. Be safe this weekend, and may God bless America. Thank you.
And remember, ladies and gentlemen, if you would like to get your game plan for retirement, McIntire Retirement Services, your resource, give them a call, 419-332-0532, 419-332-0532, or McIntyreRetirementServices.com. Once again, Chris, signing off. Thank you very much. We appreciate your time.
My pleasure. Thank you.
Tune into Chris McIntire's full radio program and visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.